All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and this week I'm going to be going over a full SMC strategy for many of you to use and get funded with. As always, the download is free in the description, so feel free to go below and you can follow along. Now, before we get into it, I do want to show some examples just for proof of concept and proof of funding. So here is our private community that we have. You can also join that in the description if you're interested. But a student of ours just yesterday at about 10:30 passed phase 1 for his first time ever using this strategy. And you can see that here. And then he also mentioned that he has another 10K running phase 1. And if pound AUD hits full take profit, then that will be another funded account for him. So if we actually scroll down a little bit, you can see here the trade he's talking about actually did end up hitting that full take profit. And this is from another funded member of ours trading the exact same strategy. And then if we go a little lower, you could see Euro GBP, another trade where a student of ours who is funded took a risk-free. And then if you scroll down even further, this is today at about 5 a.m. A student of ours didn't pass 1, 2, or 3 prop firm accounts. He actually passed 5 total prop firm accounts, which is just absolutely unbelievable. Everybody profiting from the same strategy helps a lot with that confidence and learning the strategy at a faster rate when everyone around you is also using it. So if you guys are interested in joining the community, you can check out below. But without further ado, let's get right into the strategy here. So before we get going into the specific entry criteria and the rules, I do want to lay the ground rules here. Number 1, YouTube and the trading industry itself is filled with massive overcomplication and inconsistency. And this is a very, very big issue nowadays when any channel can start a smart money concept channel and show these strategies that are just very discretionary and complicated. Some of the biggest channels in the entire industry have some of the most complex strategies, claiming that they can read every move to the algorithm, and all of this just leading to massive inconsistency in traders. You yourself have to understand and just be truthful with yourself. Have you made profit in trading in the years or months that you have been trading? If the answer is no, you may fall into this category of overcomplication. And for those of you that don't fall in that category or don't believe you do, you may fall in the second one here, which is the issue of not sticking to one strategy. Sticking to one strategy is how you're going to truly see that progress and consistent results. It is very, very important for a trader not to get lost in the many channels in smart money space and start trying to use a different strategy every time they experience a losing streak or some period of drawdown. So the goal with today's video is this very simple, mechanical, and most importantly, of course, free strategy that you guys can follow along and get yourselves funded with and learn how simplicity is really supposed to be used in a trading perspective and how you should be relying on the probabilistic side of trading more than the analysis side of trading. So pay attention, download a copy in the description, and let's get going. So we're going to start here with the very basic entry checklist. Now this one has a star next to it because it is an optional piece of this edge here. Understanding and identify your higher time frame goals and bias. This is personally a rule that I don't use. I don't really care to follow the higher time frame because I find it is a very discretionary form of analysis and can shift at any moment. So I rely mostly on the entry criteria that we're going to go over below. And most importantly, I rely on the probability of my edge. I understand that if I don't use the higher time frame, sure, I may have a lower win rate, but overall that increase in the number of trades will increase my profit overall in time, as long as I'm okay with withstanding drawdown periods and understanding my win rate is slightly lower. The first mandatory rule that we have here is number 1, which is identifying an impulsive sweep on liquidity. This is identifying those very impulsive and strong areas where institutions are grabbing orders from the majority of uninformed traders and using that for their own advantage. Followed by a strong and clear break of structure. Typically, we look for a lot of price action above a high or low, or in the very simple terms, a candle close above a high or low to signify it's a break of structure and not a sweep. If you see a wick just reach above a high in price reverse, it is not a good enough sign for us to go and take that trade. We need that clear and strong break of structure to show that the institutions are more likely than not on our side of the market. Rule 3 is going to be verifying there's a fair value gap within the range. This shows high volume, once again being a clear footprint and signal that institutions are involved. And then last but not least, the very simple entry model. Enter at the 75% fib level of the range, giving you that 3RR fixed risk to reward ratio. This is very important because I find it limits the amount of discretion in the entry model and focuses on a more mechanical and systematic approach for your entry. Some people using supply and demand or fair value gaps and all of these different things for entry. The issue here is that they can be very discretionary, and this slight difference can cause missed trades, losing trades even, depending on where your stop loss is placed. And all of those minute details are very, very important to a long-term edge, especially when there's no concrete way to go about it. So having a concrete rule like a 75% fib, which does not change, it is mandatory to be in the same place every time. It means that you're going to be a lot more consistent long-term, as well as psychologically stable using your strategy. Now we're going to take a look here with the checklist on the left and looking at the image that we have. So once again, step 1, identifying an impulsive sweep on liquidity. We can see that right here. We have a significant low in the market where we know a lot of orders rest below. The institutions may drive price through that, collecting that liquidity in that area to then use those orders to drive price in their intended direction, which is what we see here with this break of structure. Price breaks structure higher and creates a very strong range here from this low to this high. We have to verify that there's a fair value gap within that range, which I depicted here, of course, by this purple box. And last but not least, from that low of the range to the high of the range that has now been created, you use that 75% fib level to not only give you that fixed 3 risk to reward for every trade, but to also make sure that you're entering the same place for every trade, which is the 75% of that range. Some people with supply and demand concepts, they may be entering here, they may be entering here, maybe a fair value gap, they could enter at the top, the 50%, the bottom of it. All of this variance does create a long-term discrepancy in your data. So focusing on something very systematic and simple, like a 75% fib, means that you're going to be more consistent in the long term and have that psychological stability to just understand if you missed the trade, you missed the trade. There's no reason for, oh, my supply could have been drawn here, or oh, I should have entered on the fair value gap this time. All of these differences is what creates inconsistencies long term, and our goal here is to be very simple and systematic. So with that out of the way, we're going to briefly look at my 2 most recent trades on my account. Now I went over these setups in the last video, but I will go over them again because I am done trading for the year, and we can see it's going to be these 2 winning trades that capped off the end of my year here, and that is going to be USD CAD as well as Pound CAD. So the first setup I saw here was very simple. Once again, we saw that sweep on liquidity like we talked about. We saw the break of structure with the candle close. Price was forming higher highs and higher lows, already giving me that bullish bias for those of you that may want to use that optional rule. And then we saw the fair value gap here. So once again, very simply, now that all the rules were met, I was able to slap on that order. Price worked its way back in, tapped into my entry, and then very, very quickly tapped TP within the day. This was a 3 risk to reward gain for myself, who risks 2% on my personal account. I made about 6% on this trade. Then we're going to take a look at one more here, which is USD CAD. On USD CAD here, same idea. We see these higher highs and higher lows forming, and clearly a very bullish trend here. And all I looked for was, number 1, this sweep on liquidity. I like the range that is right here, and then this very impulsive move through the lows. What this means is that all of the orders in this area were now absorbed by institutions, and when they reach through an area that has a lot of sell orders like this, which is known as a sell stop, they can grab those orders and convert that into very strong buy power, which you see following right after. So now that the liquidity was grabbed, we see a break of structure of the high. We also verify there's a fair value gap within the range. We can now take our fib and draw it from the low to the high of this range. And once again, a very clean and quick TP. Price worked its way back into our entry, tapped us in, reached our risk-free level, did consolidate for a little while here, and then inevitably pushed very quickly towards our take profit level, making another 3 risk to reward. So as you can see, just these 2 trades alone was about a 12% gain for me within a week. And this is very important because many prop firm challenges or evaluations have an 8 to 10% target. And you can see just risking 2% of my account, I would have very, very quickly and easily passed that prop firm evaluation. So to finish off, just to remind you guys once again, you can download this strategy completely for free in the description. I highly advise you to do so. It is free, so why not? And if you guys have any questions about it, when you do download it, you can always reach out to our support email, support@simplemarketsacademy.com. Anyways, I hope you guys gained some value from this video. I appreciate everybody that tunes in. I hope to see many of you get funded like our students using this strategy, and I will see you guys all in next week's video.